Hello everyone, and welcome to Reserve Bank of India for this post-policy conference, press conference. As always, we have a respected governor here, and along with him are Deputy Governors Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, Shri Swaminathan J. And also with us today are Executive Directors Dr. O.P. Mal and Dr. Rajiv Ranjan. With this, I welcome all of you to the RBI's press conference. And before going ahead with the press conference, I'll request the Governor to make a few opening remarks. Sir.
Thank you. As I have done on previous occasions, I would like to summarize whatever I have said in my statement. And I have 9 points very quickly. First, domestic economic activity continues to be resilient. India is poised to become the new growth engine of the world. Second, declining core inflation is a silver line, but headline CPI inflation remains vulnerable to recurring and overlapping shocks. Especially remains, let me rephrase it, declining core inflation is a silver line, but headline CPI inflation remains vulnerable to recurring and overlapping food price shocks. Third, the MPC remains highly alert and will not hesitate to take timely and appropriate action if situation warrants. Four, it's emphatically reiterated that the inflation target is 4% and not 2 to 6%. Hence, monetary policy needs to remain actively disinflationary at the current juncture. 5. Liquidity will be actively managed consistent with the monetary policy stance. OMO sales will be undertaken as necessary. 6. Banks with surplus funds are encouraged to lend in the interbank call market for better returns instead of passively parking them in the SDF. 7. The financial sector balance sheet remains robust. While the Reserve Bank is closely monitoring the emerging trends in banks and NBFCs, while the Reserve Bank is, let me repeat, the financial sector balance sheet remains robust. While the Reserve Bank is closely monitoring the emerging trends, banks and NBFCs are expected to strengthen their internal surveillance mechanisms and institute suitable safeguards wherever necessary. 8. Financial stability is fundamental to price stability and growth. That is the core principle which we follow. 9. The external sector is eminently manageable. Thank you.
Thank you, sir, for those opening remarks. I'll begin the press conference by inviting Mr. Anup Roy from Bloomberg to ask his question.
Thank you, sir. Sir, this is regarding the OMO announcement that you did. So will there be a calendar for OMO, and is this in preparation for the JPM bond index inclusion?
As I have said in my statement that first thing I would like to say that it has nothing to do with the bond index inclusion. And let me reiterate that it has nothing to do with bond index inclusion. It's a part of our domestic liquidity management. With regard to calendar, I have said that we will watch the evolving trends. There are several moving parts in the whole liquidity scenario. We will watch the evolving trends and we will notify as and when it becomes necessary.
Thank you, sir.
So we do not at the moment propose to give a calendar.
Thank you, sir. I'll move on to Mr. Manojit Saha from Business Standard.
Good afternoon, sir. You have said that the transmission is still not complete, while saying that the stance is withdrawal of accommodation that is maintained. So do you expect banks, does RBI expect banks to further adjust their rates so that transmission is complete? And are you worried that a change to a neutral stance will dilute your resolve, will signal a dilution of your resolve to act on inflation?
You see, a change of stance to neutral will be on table when the situation becomes so. At the moment, the monetary policy, the rate hike is still incomplete. I have given the numbers in my statement. We have increased the repo rate by 50 basis points, but it has not fully translated to either the deposit rates or the lending rates of the bank. There is still some distance to be covered. So we would expect that to, align with the increase in the repo rate. And so therefore, at the moment, the stance remains withdrawal of accommodation.
But why OMO sales when liquidity is already in deficit? You expect the deficit, you have a figure in mind what kind of deficit you want to?
Okay, I would request everyone to just stick to one question. So, you see, liquidity is not in deficit. The liquidity over the last 2 or 3 weeks went into a deficit mode mainly because of advance tax payments and GST payments. So therefore, what was a part of liquidity went as payments for GST and payments of advance tax last month in September. Advance tax was in the middle of September and GST was around 20th of September. So therefore, for those 2-3 weeks, the liquidity became very tight. But overall, if you see, the liquidity is surplus. We have announced withdrawal of 2,000 rupee notes. And 2,000 rupee notes, we have so far got back about 3,43,000 crores. And only about 12,000 crores or so are left. And so 3,43,000 crores we have got back, of which, of course, 87% has come as bank deposits. The rest is, exchange of cash to other denominations across the counter. So there is a substantial amount of, therefore, liquidity which has built up because of withdrawal of rupees 2,000 notes. Government spending is also now picking up. The taxes came around 15th, 20th of last month. Government spending has picked up and will pick up. So therefore, that will also add a lot of liquidity in the system. And I have also said that in the festival season, the demand for currency will go up. So currency in circulation will go up. So that will sort of drain out some amount of liquidity. But overall, if you look at it, the liquidity liquidity is in surplus. So we have to be very watchful. That's why I have said we have to be active. There will be active liquidity management. We will be very watchful. The whole liquidity matrix has several moving parts. We will remain watchful, and we will undertake whatever operations are required from time to time. OMO sales is one which we thought would be required. So therefore, we have made a mention about it in my statement. Thank you.
Thank you, sir. I'll request everyone to stick to one question. Maybe we can come back for a second question. So I'll move on to Ms. Lata Venkatesh from CNBC TV18.
Thank you. Is it working? Yeah. Okay, thanks. So I have to stick to OMO again. When you say OMO intervention, as you say, you have not given us an idea whether you will do an OMO auction or what you have been doing all these days, some quiet screen-based buying. And what is the purpose? Is it that you want to react to the global yields and therefore, some kind of a bulwark? What is your trigger? Has it got anything to do with the way global yields are, 1 full percentage point higher? And more generally, as a EM central banker, what are your fears and what are your tools when you see such a rise in yields?
First point is that this will be done through an auction process and not through the NDS home platform. This will be an auction process. We will notify it and then we will undertake the auction. We will undertake the operation. That is the first part. And with regard to global bond yields, our liquidity management, what I have announced, as again, let me reiterate, has nothing to do with the global bond yields. if you see the statement carefully, what we have said is that our liquidity management will be consistent with our monetary policy stance. So it will be consistent with the domestic, the monetary policy stance in the context of the overall liquidity situation. So it has got nothing to do with the bond yields going up in the advanced economies. And what was the other part you asked?
General observation, when, it is the international currency, reserve currency for now, and when yields go up there, as a EM central banker, what are your fears? What are your tools?
No, you see, our bond yields, domestic bond yields are reacting to domestic factors. Our domestic bond yields are not really reacting to international factors like the bond yields going up in some advanced economies. Our bond yields are determined primarily by domestic factors as it stands today. The bond yields going up elsewhere, especially in the United States, do normally lead to currency depreciation in the emerging market economies. But the difference in the context of India is that our forex reserves are sizable, very comfortable. So that gives a lot of confidence to the market. And secondly, we do intervene in the market to maintain stability of the currency and to prevent excessive volatility. So primarily, if I can put it differently, we use one bird to kill one. We use one stone to kill one bird. Of course, to kill a bird is not the right thing to say in the context of, the safety of animals, but this is a manner of speaking. So I'm not saying that we'll go and kill a bird. So please don't take it other way, especially the animal lovers and the bird lovers among you. But on a serious note, we use one instrument for one target, for one objective. When you use an instrument, it may have some collateral impact elsewhere. So that is how it stands. So basically, we will use one stone to kill one bird. Sorry?
Remittances are falling. 1 billion a quarter, they are falling.
Remittances are remaining quite robust. Remittances are remaining quite robust and quite steady. Temporarily, it may happen, but our data shows that they are holding quite comparable to last year. Would you like to supplement?
Our balance of payments for the first quarter shows very strong remittances. In fact, this year might be higher than the year gone by.
I think, Lata, will move on from here. We'll come back to you later on. Let's now go to Swati Bhatt Shete from Thomson Reuters.
Thank you, sir. I'm going to stick to the liquidity theme, sir. So do you think there's a need for the RBI to rework the liquidity framework? I mean, under the existing framework, the 14-day VRR and VRRR is the primary auction. There isn't active participation seen or as much adequate participation as RBI would like. Now that that's happening, you've had to use innovative tools like ICRR. And now that liquidity is going to remain the key theme, and under the current framework, the call rate needs to be aligned with the repo rate. And you yourself said in today's statement that it's more towards the MSF. Is there a need to rethink this framework, and are you going to actively pursue anything to bring the call rates and overnight money market rates back to the repo rate? Thank you.
I think I would request DG Michael Patra to reply to that.
I think the liquidity management framework is robust. The ICRR was not a reaction to low subscriptions in the regular auctions. It was an instrument intended to deal with a specific occurrence, that is the 2,000 rupee notes. The regular operations are essentially intended to enable banks to maintain their reserve requirement cycles.
So, but getting the overnight rates back to repo, is that something that you're going to actively pursue? Because that's, as per the current framework, that's required, right? I mean, it needs to be anchored to the repo, and
yes.
We are already close to MSF.
Yes.
Or you've done an effective rate hike.
No,
so
if you see on a daily basis, the call money rate is around 6.75. But if you average it for the month, it's 6.56, which is at the repo.
So, thank you, sirs. I'll move on to Mr. Govardhan Rangan from Economic Times to ask his question.
Thank you. So good afternoon, Governor. You actually manage liquidity as and when required. You intervene in the currency markets as well. And now you spoke about the OMO as well, right? So it's a kind of active management of many moving parts. So now, since your announcement of OMO, and the financial conditions are not as tight as it is in the rest of the world. If one looks at the a 10-year yield gap between the US 10-year and it used to be 500 basis points on average, but now it's some 220, 225. Is it a kind of a RBI facing kind of an impossible Trinity kind of a situation now, in the sense trying to manage all the three, your monetary policy, exchange rate, and flows, everything? Thank you.
No, I think as I just replied, we use one instrument for one objective, one stone for one bird. There may be some, fallouts, there may be some collateral effect elsewhere, but primarily we use one instrument for one objective. Liquidity, whatever we are doing, it is because of the domestic liquidity situation. Foreign exchange, the forex, the pressure on the exchange rate because of, let's say the dollar index going up, etc. That is managed through, because we have, as I said, we have reserves, enough reserves, and that is managed through market intervention to prevent volatility. So that is how it stands. I don't know, have I answered your question, or is there something else you...
So in terms of the tightness of the financial conditions, so there is a kind of a difference that used to be there in terms of the advanced markets and the emerging market, and especially India. Now that has really narrowed quite a bit. Is that probably a reason for you to really think of OMO as well now at this point of time, to really tighten the financial conditions and push up the yield rather than just manage the liquidity?
No, it is not a yield management, the OMO now which we have announced, it's not a yield control or a yield management instrument. It's entirely to manage liquidity. Would you like to say something? Huh?
That's exactly.
Thank you, sir. I'll move on to Roisuke Hanada-san from Nikkei Asia.
Just,
Sorry. Good afternoon. Actually, last month, G20 summit decided to welcome the African Union as a permanent member of G20. Then my question is that what do you think of the impact of this decision on the global framework for the discussion, especially regarding the international discussion of the financial sector? Thank you.
I think the inclusion of the African Union in G20 is a very welcome development. It goes in line with India's objective of placing the voice of global South on the global table. G20 is a multilateral forum, and you cannot have a situation where a whole continent is left out of it, excepting South Africa, which is at the southernmost tip of the African continent. So to that extent, I think inclusion of African Union is a very welcome development. And now the financial sector issues and other factors relating to Africa will be discussed in G20. Africa now gets a voice in the G20 forum to express the situation in Africa, in various African countries, and to express their priorities and their expectations from a multilateral forum like the G20. This very much in line with, not only India's priority, but also I think it's the international priority to have to listen to the voice of a large continent like Africa.
Thank you, sir. I'll move on to Mr. Ankur Mishra from ET Now.
Thank you, Yogesh, sir. Good afternoon, Governor. You have raised red flags about the personal loans, some of the pockets of personal loans, but it is only a warning and no action. Is there any action also which is planned, meaning in terms of regulations? Is there something which RBI is thinking, and where is the problem? Is it more of fintechs, or it is even there in banks and NBFCs as well?
You see, I have said in my statement that the balance sheet of the financial sector, especially the banks and the NBFCs, they continue to be robust. All parameters, you look at any parameter with regard to banking, with regard to NBFCs, they are better. In fact, the GNPA figures of the banking sector, the unaudited figures which we have now got for end of June, looks even better. NBFC also are experiencing a similar situation. Our objective of saying like this, saying what we have said, is that, and this I have said earlier also, that we have to be mindful of what can going forward pose a challenge, what can become a future risk. So in certain segments of retail credit, we saw high credit growth. So it is only to caution the banks to strengthen their internal surveillance systems, to watch the trends and take whatever measures are required. And so far as the Reserve Bank is concerned, the Reserve Bank Supervision Department monitors it very intensively. But the first line of defense is the bank, and the NBFCs themselves. So it is to sensitize them about the credit growth which is happening and not lull them into any kind of complacency. This is in line with what I have been saying over the past few months.
Thank you, sir. I'll move on to Mr. Ben Jose from PTI.
So this is again on the personal loans that which you have flagged. Is it, if you look at the messages that you get, SMSs, so
Sorry,
the marketing messages that we get is mostly from the private sector banks and NBFCs. Your worry is about the banking system as a whole or the private sector and the NBFCs?
So we are the regulator for the entire banking system. So whatever we say is for the entire banking system, which includes public sector, private sector banks. It includes the small finance banks also. It includes various categories of NBFCs, the upper layer, the middle layer, and the base layer. So it's for everyone. We don't differentiate, between our messaging among which sector the banks belong to. Wherever individual bank-related issues are involved, I'm explaining the normal practice. Wherever individual bank-related issues are concerned, our supervisors normally engage with them directly.
The problem is more among the private sector banks. Internally, what is the rationale for the warning? So public warning during the policy.
No, as I said, it is not because we are seeing that some problem is already there. We are only sensitizing them that you have to be
careful.
You have to be careful. You have to just keep your eyes and ears open, and nose also open. You have to smell where the crisis is likely to come up. At the moment, the banking and the NBFC sector are stable. Is there anything you would like to add?
No, just to supplement on that, essentially if you look at the last couple of years, the year-on-year growth on the retail credit has been close to 30% in most institutions. On an average basis, the unsecured retail credit has grown at 23%. If you see that in the context of rest of the credit growth, which is anywhere from 12 to 14%, it looks to be an outlier. So as a supervisor, it is our intention to inform the banks that this is an outlier level of growth. So strengthen your internal surveillance mechanisms so that any risk that may likely be building up is handled upfront rather than coming to grief at a later time. And also because of the ability to lend through digital modes, this particular segment is showing a far greater growth compared to others. So we are mindful of that in terms of the opportunity and the ability to, the ease and convenience that have been brought through the digital mediums. And if there are, as Governor said, when we see any outliers, they are reached out separately. This is a general system level advisory so that the banks and NBFCs and all the players strengthen their internal measures, put internal prudential framework, have their risk appetite framework and grow their portfolio sensibly. So that's the intention at this point in time.
No need for provisions or risk weights.
We have not announced any regulatory measures or macroprudential measures at this point in time. We would expect as a first line of defense the banks and NBFCs and the fintechs to take appropriate internal controls. In case if we don't see internal controls playing out, then we will examine. But at this point in time, it's only an advisory.
Thank you.
I'll move on to Mr. Jeevan Bhavsar from All India Radio.
नमस्कार सर, विभिन्न अनियमितताओं के कारण
लाउडली बोलिए।
विभिन्न अनियमितताओं के कारण रिजर्व बैंक कुछ बैंकों के लाइसेंस रद्द कर देती है। उस वजह से बैंक के जो ग्राहक होते हैं उनमें एक अफरा तफरी मच जाती है। हालांकि बहुत सारे केसेस में हमने देखा है कि 95% से ज़्यादा जो अकाउंट होल्डर्स है उनको उनका पूरा पैसा DICGC की तरफ से वापस मिल जाता है, लेकिन ये जो अचानक से जो लाइसेंस कैंसिल कर देना है, एक अफरा तफरी या एक डर का माहौल उनमें तैयार होता है। तो क्या हमारे पास ऐसा कोई सिस्टम है या कोई सिस्टम हम प्रपोज करेंगे कि जिससे हम इन अनियमितताओं के बारे में बैंक के ग्राहकों को पूर्व सूचना दें?
आई थिंक DG राजेश्वर राव कैन टेक दैट क्वेश्चन।
ये एक अचानक फैसला नहीं होता है, जैसे कि हमने बोला है, कैंसिलेशन ऑफ UCB लाइसेंस इज नॉट ए सडन इवेंट. Banks are kept under if they fail to meet certain prudential thresholds, financial thresholds, they are placed under a supervisory action framework for corrective action. If that doesn't fail, they are placed under an all-inclusive direction, and the bank is monitored closely to ensure that they are able to come out of the financial problems which they are facing. It's only when these measures do not take place that a decision is taken to cancel the license. So it is not an event, and there is sufficient time given in this entire process for the banks to rehabilitate themselves through various measures.
लेकिन सर इसी ये था कि अब जो कॉमन अकाउंट होल्डर है उनको ये सब चीज़ें सबसे लास्ट में पता चलती है जब RBI लाइसेंस कैंसिल करता है। तो अगर हमारे पास ऐसा कोई सिस्टम है या कुछ प्रपोज है कि हम जो कॉमन अकाउंट होल्डर है उनको कुछ अलर्ट भेजें?
जब बैंक को हम ऑल इंक्लूसिव डायरेक्शन वगैरह में डालते हैं तो प्रेस नोट तो इशू होता है, तो उनको उससे तो चेतावनी जो ज़रूरी है वो मिल जाती है।
Thank you, sir. I'll move on to Mr. Laltendu Mishra from The Hindu.
Thank you, Yogesh sir. Good afternoon, Governor. Sir, you have said the government is stepping up spending and is also likely to step up further. And in the last 2-3 years also, government is spending heavily, that is supporting the growth. I would like to know the state of the financial health of the government. As a banker to the government, are you satisfied? Are you comfortable? Thank you, sir.
The government has, I mean, first thing is it's not for me to really comment on that, but since you have asked as our perception as a banker to the government, let me say that the government has a fiscal consolidation path which they have announced in the budget. There was fiscal expansion because of the COVID time requirement, but the overall expansion that India did under the fiscal was very cautious, was very calibrated. Cautious is not the right word, but it was very calibrated and targeted. After the pandemic, the government has announced a fiscal consolidation roadmap, and by and large, they are sticking to that. Even recently also, so far as the current year fiscal deficit is concerned, statement has been made by the finance ministry that government will stick to the fiscal deficit, and they are targeting this fiscal consolidation roadmap. So far as central government finances are concerned, I don't see any major problem or anything that worries the central bank.
Thank you, sir. I'll move on to Z Business, Ms. Swati Khandilwa.
थैंक यू योगेश, थैंक यू गवर्नर. मेरा सवाल सर, आपने जो रिसेंटली एक कमेंट दिया था अबाउट कॉर्पोरेट गवर्नेंस, जो बैंक्स में गैप्स दिख रहे हैं, उसके पॉइंट ऑफ व्यू से जब बैंक्स को ये कहा गया, आपने उसमें कुछ इम्प्रूवमेंट देखा है? क्या मेजर्स आप कुछ स्पेसिफिक ले रहे हैं उनके खिलाफ जो फॉलो नहीं कर रहे हैं? उस पर क्या व्यू बना है सर अब तक?
देखिए, कोई भी संस्था में किसी वक्त उसमें इम्प्रूवमेंट के लिए स्कोप रहता है, और हमारे जो बैंक है, वैसे मैं आपको कहने के लिए चाहता हूं कि पिछले कई सालों में जब एसेट क्वालिटी रिव्यू शुरू हुआ, फिर उसके बाद कई सारे स्टेप्स हमने लिए हैं. बैंक गवर्नेंस गाइडलाइंस हमने इशू किया, 2021 में गवर्नेंस गाइडलाइंस हमने इशू किया है, और NBFC सेक्टर के लिए न्यू रेगुलेटरी फ्रेमवर्क भी इशू किया है, माइक्रो फाइनेंस सेक्टर के लिए न्यू रेगुलेटरी फ्रेमवर्क भी इशू किया है. उनमें ये जो इंस्टीट्यूशंस है बैंकों में, जो अवेयरनेस है अबाउट द इम्पोर्टेंस ऑफ रिस्क मैनेजमेंट, गवर्नेंस एट्सेट्रा, वो काफ़ी बढ़ गया है. अभी आई कैन टेल यू दैट the banks are far more sensitive with regard to risk management and with regard to other areas which form part of governance, namely risk management, compliance, and even internal audit. And so therefore काफ़ी सुधार उसमें आया है, और आगे भी जाके सुधार का मतलब आगे भी जाके उसको फाइन ट्यून करना है, इम्प्रूव करना है. जहां हम कुछ डेफिशिएंसीज देखते हैं उसको हम रिजर्व बैंक और इंस्टीट्यूशन के बीच थ्रू सुपरवाइजर्स हम उनको पॉइंट आउट करते हैं कि ये जो है आपका एरिया, इसमें इम्प्रूवमेंट की ज़रूरत है, आप इसमें कुछ इम्प्रूव करिए. सो बट अदरवाइज आई थिंक ओवरऑल द गवर्नेंस स्टैंडर्ड्स, consisting of what I've said, that key risk management, the compliance culture, the internal audit, and the sensitivity to maintain a robust balance sheet, that has definitely improved. But you have to improve further. I mean, that applies to everyone in every situation.
Okay, thank you, sir.
So we'll move on to Mr. Anand Adhikari from Business Today now.
Good afternoon, sir. Sir, I was looking at some of the external, data points since the August last policy. So now, if you look at the 10-year US yield, is almost, 20-25% up. I mean, almost 100 basis point, like Lata said. US dollar index, if I say how the dollar is strengthening, is almost 6-7% up since the August, policy. Crude, we all have seen the high volatility, though yesterday I think it was down. Now, if I look at the impact in the Indian parameters like rupee, I have seen depreciated around 50 paisa, since the last August policy. Forex reserves are down 13 to 14 billion, again, since the last August policy. And FI outflow we have seen in the month of September and October. Now, in the context of liquidity, you said that it's a turning pitch and you want to play your sorts very carefully. How would you describe this external side? Or maybe in cricketing parlance, if I say.
I think you can take that question.
So, as Governor mentioned, we have very strong buffers in the form of foreign exchange reserves, which insulate our economy from global spillovers that you mentioned. As you can see, our bond markets react to local specific phenomenon in India and seem to be reasonably insulated from the yields in the advanced economies. If you look at our external indicators, the current account deficit is extremely modest, 1%. And
April to June.
April to June. Also, if you see the last year, the whole of the last year gone by, it is within 2%. The fact is that the whole current account deficit is more than comfortably financed, and that's why we build reserves. If you see the movements in the reserves, they are more or less due to valuation changes rather than a durable decline. If you knock out the valuation changes, as we do in the balance of payments, you will see there is an increase of 24 billion in a quarter. You look at the BOP, the balance of payments change, there you can see the improvement.
Thank you.
In fact, it's there in my statement also that on a BOP basis, the net accretion to our reserves is 24.4 billion US dollars.
Yet is the April to June or April? Okay.
Thank you, sirs. I'll move on to Mr. Sachin Kumar from Financial Express. Please ask your question.
Good afternoon, sir. You mentioned about skewed liquidity situation where some banks are parking some banks